SMT Nation, we back. Nation, big news out of T-Mobile. They're about to get real carrier. In a way, I guess some of us kind of saw this coming. I think it was just kind of a point in time where it was going to be a realization that some of the things that T-Mobile hasn't been able to do, they are now going to be able to do because of their position within the market. The market is consolidated. They eliminated Sprint with the merger. They've got big boy toys to make big boy noise, and they're starting to generate free cash flow. And now the investors are a knocking, talking about synergies from the merger, and they want their costs. All right, so having that patience, having that investment into the company, now it's time to pay out for T-Mobile. So T-Mobile is going to now officially be paying a dividend. This is official news coming out of, I think, a filing or a press release from T-Mobile. I don't know if it was to their investors on their investors page, but the release came out, and you know it's two pieces actually. You've got a ginormous share buyback program, right, where T-Mobile can buy the common shares in the stock, and I think they're doing so at a pretty accelerated pace. So previously it was like at $8.5 billion for the front half of the year. Tracking through next year, the annual is going to be about $19 billion, according to the press release. So $14 billion buyback this quarter, which is crazy, and then $8.5 billion from the first two quarters. Then starting in the fourth quarter of this year, going through the end of next year, another $19 billion. So an absolutely insane amount of share buybacks for this company. It's unprecedented. They've never done this before, from what I understand. So this is huge. And then also throw in the fact that they're going to be paying dividends over the course of the next 4 or 5 quarters to the tune of about $3.75 billion. The only way you do this, folks, is if you're generating free cash flow. In case you haven't noticed, this is a company that is new to free cash flow. Previously, T-Mobile didn't generate free cash flow. They didn't make money. Their margins were weak. Their profits, worst in the industry. But with the merger, with those synergies, and let's be honest, guys, new fees, new charges, increases to existing fees and charges, 5,000 job layoffs last week or last couple of weeks, 15,000 in total, I believe, since the merger completed, a complete reshift to retail operations, store closures, realignments, executive staff changes, shufflings, and eliminations. That was how they did this. There was no other way. Even till now, they still don't really generate enough free cash flow to do this. But now with that restructure, they are signaling an acceleration in free cash flow. You're going to start to see them making as much money to the tune of, what you're seeing a little bit closer to like Verizon and AT&T, who in some quarters generate over $4 billion in free cash flow. I think T-Mobile pretty close to $3 billion last quarter, if I'm not wrong. Don't quote me on that. I know it's somewhere around there. But they're starting to look and act like one of the big boys. All right, so once you start making free cash flow, you can start to do corporate things like this. And I think it also signals the fact they have been watching their shares of, well, I should say their ticker, right? How their stocks trade. The stock trades, I think it's currently in the mid 130s or something like that, down from like a peak of about 150 earlier in the year. Maybe a signal that it's kind of the heyday of that ticker. Maybe they start to kind of trade a little bit lower, but offer a dividend to keep the investor around, possibly. I mean, they still have upside. It's not to say that they don't. They still grow, improving margins and profits. But folks, it is 100% in alignment with the fact that they have completely changed how they do business. Their plans are the most expensive within the industry. They do offer some value within the structure of some of their plans, and they don't raise pricing on their legacy customers, but they compete for customers in the space with T-Mobile, kind of as the marketing leader, taking share from, the other companies, and they still have that momentum, and they're still riding it out. I think they're doing what's best for the company. It's time they shifted into this mode, but I guess it was just a matter of time. We're not shocked, right? We kind of saw what they were telling us. We saw the signs of the free cash flow. It's changing. It's improving. it might continue to increase, and then they could continue to make moves like this. If you're and I don't do financial advice. I don't tell people what to invest in, but you have to temper your expectations in their growth. Now, I think that signals it in a way. Them offering a dividend. This is what the other carriers have done in the past in offering dividends and focusing on share buybacks to add value to the investor, in their relationship with the stock. All right, so tell me what you guys think of this. Tell me what you think of the share buyback program. Very accelerated, very aggressive. And then to add a dividend, which they previously never had, that's kind of big for them. This is a step kind of showing they're putting on their big boy pants now. They're pink, but they're big boy pants. Let's be honest. Let's call a spade here. Sound off in the comment section below. You all, voice of the people, the SMT Nation. Let your voice be heard. And if you appreciate the content and want to support your creators, there are ways to do that. They're all in the description. Thanks in advance. Your creators need you more now than ever. And we will see you on the next video. Peace.